So if you were lucky enough to get Dream for All funds reserved in the 8.5 business days that it was available, you feel like you won the lottery. And I think you might be in for a big shocker because there's some pretty big issues that we're running into right now that you need to be aware of, either as a realtor or a buyer, or if you know somebody who's using this program. There's some challenges that are coming up, and I want to share those with you. So first of all is the challenge of I'm stuck buying this property. I've had buyers, I've had friends, colleagues who have had buyers who are kind of finding, hey, I got some issues with this property. I've got concerns about the condition of the property, and yet you can't transfer your dream reservation from one property to another. So if you cancel this home, you cancel your dream. You cancel the ability to get into a house and get this amazing 20% share investment from the state of California. It's a great, great program, but it's got kind of a hazard built in that says you're almost forcing yourself to buy a home that you may have otherwise canceled and gone and bought something else. It's called buyer's remorse. It happened a lot in 2020 and in 2021 when interest rates dropped significantly, and a lot of buyers, you had 20, 25 buyers trying to buy one home. And they bid over the price and they waived their inspections and they bought houses sight unseen. And they said, look, I don't care. I just need to get a house. And then a year later or 6 months later, they have what's called buyer's remorse. And that's a major concern that I have is people are going to buy homes that have issues, but they're going to ignore the issues because, well, if I don't buy this home, I lose the dream funds. So I'm super concerned about it. And I think we've got to get out of the hyper focus. There are other ways that you can get financing that don't require dream funds. I know that this is the lowest payment that you can get, and I understand that that monthly payment is critical. But there's other down payment assistance programs that may have a little bit higher monthly payment, but you don't have to share the equity that you grow with the state. And maybe you, instead of investing money in your 401k for a period of time, you liquidate some of what's in your 401k and you use that to buy a home. Because what's the point of a 401k? The point of a 401k is having wealth long term. Well, guess what? You can have wealth long term by owning a home and getting all of the appreciation instead of only 80% of it. And that will give you more wealth than what you're giving up in the 401k. And you only have to give up the 401k temporarily, because once interest rates come down and you refinance, now you have a lower monthly payment and you can start putting money back into the 401k. All right, second hazard that is happening right now is the issue of timing with Cal HFA. There's a bubble. Cal HFA has to approve every one of these loans. They have to do a compliance check to sign off on it. Well, I've been watching the numbers really, really carefully. Last week, they were running about 40 files in line, and it was taking them, sometimes they were working on loans from the day before, and sometimes they were working on loans from 2 days ago, but the number never got bigger than 40. And as a matter of fact, on Monday, there were only 10 loans in line on Monday. And so Monday, they were working on files from Friday. Tuesday, they end up with 40 loans in line, and they're working on files from Monday. Wednesday, they've got 40 loans in line, but they're working on files still from Monday. Now, here we are on Thursday. It's gone up to 105 files in line. I think that's the number, pretty darn close to that. 100 and something, very low hundreds, 105, I think, files in line for review. Now, they're reviewing files from Tuesday. But the most recent week of history proves that they've got the capacity to manage around 40 or less files per day. So if they're only able to get through 40 files a day, then yesterday, they got 3 days worth of files. So therefore, they're not going to finish working on yesterday's files until Thursday, Friday, and Monday. Then they'll be done working on the files that came in on Wednesday. Well, what about the files that came in on Thursday? I think there's going to be more than 100 that come in today. I think there's going to be more than 100 that's going to come in tomorrow, because we have over 2,000 families that got accepted with the California Dream for All program. And guess what? It is only a 30-day lock from the lender, 60 days from CalHFA, and I'll explain what that means in just a second. But you have a deadline on your reservation. So CalHFA is right now 3 days behind. Their computer only says they're working on files from 2 days ago, but I promise you tomorrow they're still going to be working on files from Wednesday. On Monday, they're still going to be working on files from Wednesday because they can't get through them that fast. And I highly doubt that CalHFA has been able to hire more compliance people and get them trained in the last couple of weeks. because they didn't expect this money to run out in 8.5 business days. So they didn't expect to have, over the 30 days after that, they have to get 2,000 files through their system that's designed to help process maybe 40 files a day on average. This is going to create a major backlog. I expect that by this time next week, there'll be 500 files in line. 500 files in line is over 10 business days worth of processing that a file is going to sit at CalHFA for at least 10 days if it's submitted next week. That's a major issue, because CalHFA reminded us when this program was paused last week that the money is only reserved for 60 days. But that 60 days is a bit misleading, because that 60 days is based upon, that's when us as the lender have to sell the loan to CalHFA. There's a process called post-closing. Once you sign and you get your keys, the title company has to ship the original documents back to us. We have to package it together. It takes a few days for us to get through it and to send it to CalHFA for sign-off. Technically, we send it to a company called Lakeview, who's the servicer of the loan. And then Lakeview reviews it, and they pick it apart, and they ask questions. And they say, hey, you said that this guy made $25 an hour, but I see a pay stub here saying $24 an hour. How did you calculate that? And there's some back and forth and back and forth. We have the deadline of 60 days from the day we locked to get through all of that back and forth and have them finalize their agreement to purchase the loan. That's called the post-closing process. Post-closing can take anywhere from 14 days to 45 days. So almost every lender locks you for 30 days because CalHFA gives us 60 days to sell the loan to them. Well, guess what's going to happen? You're going to have two major problems, and this is the whole point of everything I've been talking about. Hopefully you're still listening, because this is the key. Your two major problems is you're going to have to pay an extension fee. There's a cost to extend that rate with CalHFA. You're not going to lose your reservation, but you're going to pay more fees to extend it, and it's not your fault. That's not your lender's fault. It is CalHFA's fault, but it's not their fault, because they look at it and say, hey, look, more people wanted it than we expected, and we don't have the capacity to handle it. Who's really charging the money is Lakeview, because Lakeview is the investor that's buying the loan, and Lakeview's been promised they're going to have the loan sold to them so they can start earning interest. They have to resell the loan. So right now it's on what's called a line of credit. They have to resell the loan, and it's keeping it on that line of credit costs them a lot of money. So that's ultimately the first problem you have, is that you're going to have to pay an extension fee. Most lenders are probably looking at about a quarter of a point for a half of a month, or a 0.5% of your loan amount for a 30-day extension. And CalHFA only allows a few extensions. So we're going to run, I think they'll allow extra extensions. But here's the most important part. The seller of your home expected you to close escrow by a certain time. That seller is not going to get their money. Are they going to agree to extend? Because if they don't agree to extend, you've lost your dream reservation, because it's only on that particular home. So you also not only have to make the lender happy, because you got to pay for an extension fee, but you also have to figure out, how do I make the seller happy? Because it is really a high demand market. Lots of buyers wanting to buy, and not as many homes on the market for sale. So now you've got to keep the seller happy, and it's not going to make a very happy seller when you can't promise them when you're going to close. It's one thing to say, hey, I think we're going to be about a week behind. It's another thing to say, I'm not sure how quick CalHFA is going to get through this, but please stick with me, please. We're going to have collateral damage, because you've spent money on appraisals, you've spent money on home inspections, you've spent money on whatever else, whatever inspections on the home. You've invested your emotions into buying this home. You've got this 20% money that's set aside from the state that you can't get if you don't close on this home, and yet you might not have an option. You might not be able to close escrow simply because CalHFA has too many golf balls trying to get through a garden hose all at the same time. And one golf ball through the garden hose at a time is all that fits. So everybody else has to just sit and wait as they work through. This is honestly my biggest concern that I've been watching, and the bubble has started, and I believe the bubble's going to get worse. Because every escrow, every lender locked for 30 days, which means all 2,000 of these loans needs to get through this system in 30 days. And if they're able to handle 40 a day, that means they're able to handle 200 a week, which means they can only get through 800 in the 30-day time frame. How are they going to help over 2,000 families when their system's designed to help 800 in a 30-day time frame? I am super concerned about this. I will keep you updated. I'll give you more information as we go forward. Maybe every couple of days I'll update on what the numbers look like so that you can keep track of it. So subscribe to my YouTube channel so you can stay on top of it. And I look forward to continuing being a great resource for you. By the way, tonight I have a webinar on what if you missed the Dream Bunny? What are my options? If it's past tonight, you'll be able to see the replay on my YouTube channel, but otherwise the link will be down below and you can join that webinar tonight, 7 p.m. Pacific time, so that I can teach you what your options are. Maybe you're in escrow and you're worried it's going to fall out. Come join me so I can talk to you, or listen in so you can hear what are your other options. Thanks and have an amazing day.